Then let's so again, good
Very
morning,
good.
everyone. Good morning, Don. Thank you so much for your time. Thank you for sharing about the Netherlands fintech ecosystem. Um, Don is the president and the founder and CEO of Holland Fintech, and I'll let him introduce himself and start with the material.
Yeah, thank you very much, Christian. And good morning, everyone. I hope you're having a good day today. It's of course a bit funny. It would actually be much nicer to somehow look you really into the face while having this conversation. But I'm really looking forward to sharing some thoughts on the fintech developments with you, and hopefully you'll enjoy that. But please feel free to jump in any questions that you have along the way, and I'll try to make some time for that, either in the middle or at the end of the presentation, so we can go through everything that you would like to know about developments in fintech. A brief introduction about myself. I'm a civil engineer by training, worked for a couple of banks before via venture capital ending up more in the startup world. And that's where I discovered that increasingly startups were focusing on the financial industry as well, about 7 years ago, calling themselves fintech companies. And I really got triggered by that because I saw that development of startups being able to focus on the financial industry as really being an important change agent for the whole industry. And that's when I set up Holland Fintech as a open platform to actually allow companies to basically everyone to get an understanding of what this development and this change means, as well as to connect everyone together in some kind of a marketplace or a social network, you could say, to make sure that everyone is able to find new business partners. Because I think that's one of the biggest trends actually that fintech stands for, is that actually it's about an enormous increase in the length of the value chain of financial services. And I'll tell you all about that in a minute. Let me see. So why am I especially interested in this? I think in principle, a lot of people, especially non-engineers, have the tendency to think that technology is difficult. And by thinking that technology is difficult, I think a lot of people are exempting themselves from a lot of benefits from using technology. So, and it's really funny because at the same time, you see that technology is taking over our lives increasingly. We live with our smartphones attached to our hand or in our pockets, and we won't leave house without it. But at the same time, a lot of people don't have a lot of interest to actually dive in what's really behind the technology and how it all works. And especially increasingly important these days, what happens with the data. Well, what I really believe is that you could actually create a much more inclusive world by explaining and allowing everyone to participate in these kind of services. And funnily enough, you see a similar trend in the financial industry as well. Of course, financial inclusion is a hot topic these days, very often focused on developing nations. But at the same time, I also see that most people, even in Western countries, they might have access to financial services, but they still don't fully understand what kind of services they're using. So they also can't really use the full potential of it. And especially now, fintech, where the technology or digital space really meets the financial world, that's where I really believe that we could accelerate inclusion, literacy, and real empowerment of people and businesses by allowing them to better understand the technology, the processes behind it. But already, for example, cutting through all the jargon is something that would really benefit a lot of people, because they would, a lot of things aren't so difficult as they seem if you would eliminate the jargon and just explain it to people in normal language. So that's what I really hope to do as well, because I believe that in general, the developments now, they're creating an enormous toolbox of solutions that everyone should have access to. Because this is what people used to think technology was about, right? Getting into the back of a computer with your screwdriver, fixing transistors. Well, of course, technology is not like that anymore. And this is what I really believe that people should get to understand. So about fintech, especially 2015, when the World Economic Forum started writing about it, it was becoming really clear. It was a topic that was on everyone's agenda. And it became clear that the financial industry was going through a shift that was unprecedented. And I'd really like to dive in with you a little bit in what made it so different than before, because computers have been used in financial services since the Second World War. So what's so special now is the question. Well, first of all, of course, we saw that there was a whole bunch of startups coming up in the world. So here we see, for example, the website of Wells Fargo. This image is actually, I think, from 2016, so it's already a bit old. But it's a nice way of the early thinking of fintech, where people started thinking about, okay, all these small companies, all these little Davids are going to throw over the giants like Wells Fargo, because all these small companies are so much focused on delivering what a customer wants that they're getting much better at it than the incumbent players. Of course, in the meanwhile, we've learned that the world isn't so simple. And as a consumer, we aren't actually willing to work with so many different parties, right? So the number of relevant apps on our phone limits itself to 7 to 10 max. And the rest we might install for once to give it a try, but then we never look at it again. So this landscape that people try to predict and what our financial services world would look like is not really realistic from this perspective. However, on the back end, you see that still a lot of these companies are doing quite well, but they're not all focusing directly on consumers anymore. They're actually partnering up either with each other or with incumbent players to create much more singular aggregated channels to reach customers. And then it makes much more sense, because we still, just like you probably also have your favorite supermarket brand where you go to get all your other brands. In the financial services industry, it's very likely that we will work similarly. We have a couple of good advising channels, and through that, we have access to all our financial products, rather than having to install an app for every loan, savings, mortgage, any kind of product that you would like to have. And of course, we have to realize that the way we think about technology progress is highly impacted by our tendency to believe in hypes. I'm not sure if you're familiar with it, image, the Garter hype cycle. I really like it because it really explains well how our belief in technology is being shaped. And just to explain this a bit, generally, while the hill is going up, is the part where we tend to get over-enthusiastic about the potential of technology. And one of the reasons I believe that that's the case is that we're looking for a handhold into what the future might bring, because we see change around us and we want to get a grip on that. And somehow, if you look at all these technologies, and these are all sort of container words around technologies, they seem to give us a handhold in what the future might bring. And because it does so, once we understand one of these topics and we think about what the impact might be, we could actually we get over enthusiastic, and we believe that that's going to change everything overnight. Well, of course, we know the world tend to be relatively slow with change. So what happens afterwards is, if you see the slope going down again, we actually get disillusioned about how fast things are going, and we actually get up to the point that we, at the deepest point, where we actually don't believe it's going to work anymore. I'm not sure if you've been through this, but for example, we had a really big hype around the internet in 1999, 2000. But after the bubble burst in 2001, you actually heard people say in 2002, 2003, the internet, it's never going to work, right? And so it also really explains well, I think, that if you actually go to the point now, that where are we now, for example, in relation to the internet, we're on the complete right side, where there is a proper use of technology, but at the same time, we actually don't talk about it anymore because it's so normal, right? So no one talks about running an internet company anymore, because everyone runs their company on the internet, right? So, and the same, so it's good to understand that if you think about all these concepts, whether it's 5G, artificial intelligence, blockchain, deep learning, explainable AI, synthetic data, it really doesn't matter. Generally, if we talk about it too much, we're on the left side of the graph. So it probably is quite a long way to maturity. And very often the promise is overhyped. So it means we'll probably have to go through a cycle of disillusionment, but it does not mean that it's useless and it will not work in the end. But usually when it becomes normal, we just don't talk about it anymore. and it will be part of our everyday life somewhere in the technology stack. And of course, fintech is one of these words as well, right? So we've been riding the wave. We've had already a bit of a disillusionment where people were saying like, hey, but wait a minute, we haven't overthrown all the incumbent financial players. They're still there. Nothing has really changed. We've just got a couple of new players at hand, but it's not completely different. But there again as well, is you go to a new equilibrium where there's just room for multiple new parties as well as incumbent players to coexist. Well, here you see that investments going on. By the way, I see some people that are sort of really looking careful. I'm not sure if you see the presentation full screen.
Yes, we see it.
Okay, just good to check. So here you see that already here you can see sort of the hype feeling around fintech, where the number of investments in this industry has risen over the past years very, very fast. And even this year still, even given COVID, Brexit, Trump, whatever you want to name, that could have potential negative impact on investments, there's still a big rise, but we do see a big shift from early stage companies to more mature companies. So where, for example, especially in 2020, we see that mostly the mega rounds, as they're being called, with over 100 million US dollars, are actually setting the tone for most of the investments, which means that most of these companies have been there already for 5 to 10 years. And actually, it's pretty hard these days to start a new company in fintech, especially since the industry got much more regulated than before. Think about, for example, the war on money laundering that has been set up by the EU, forcing all companies that touch transactions to do monitoring and reporting, which puts on a heavy load of cost, front load, before you actually do any business for any kind of startup that does something with payment, for example, or transactions. So that actually makes it quite a relatively tough environment to start a new regulated fintech these days. And so what happens is actually that most companies are starting one step back in the value chain. So they start delivering services, specialized services that are non-licensed to financial services companies. And that's where I think a lot of the business is coming from these days. And here you can see it a bit in a stack way. So in the middle layer, you'll see the traditional financial services companies. And that's where, let's say, the traditional innovation also took place. So you had, of course, new kinds of brokers, new kinds of asset managers, new kinds of banks set up, let's say between 20 and 10 years ago. We saw these companies coming up. So think about the Big Bank, Saxo Bank, these kind of players. They all were set up around that time when the internet was allowing people to think of a traditional player in an internet way. Then we've got another wave, which was the layer on top, the dark blue layer, of product-only companies. So they started to realize that they don't have to be a full service provider. They could actually just focus much more on one product and excel in that. So that was the second wave of fintech companies basically coming up. Then actually what we see now over the past 5 years is that the layer below the financial services providers, which we call the microservices, is what popped up afterwards. So that's basically when you saw that not the product side of the financial services companies, but actually the support services like KYC, audit, custody services, legal services, risk analysis, fraud prevention. These kind of services were suddenly being created as an independent service, having much to do with the rise of APIs. So for once, companies could actually provide a component of the financial value chain without delaying the process for the customer. And that's when you got basically the hyper specialization that we've seen in other industries already 30, 40 years ago, right? So think about, for example, automotive industry. I mean, car manufacturers hardly manufacture anything these days. They basically make use of a very complex supply chain that they work with the specialists worldwide to create all the components that they need, right? So no one makes their own tires. They buy tires from the specialist tire makers. They don't make their own chairs and seatings. They basically buy that from the best companies that are able to make that. Exhaust similarly, and so on. And of course, because you have the time to build a car to deliver it to the customer, you actually don't ruin the customer experience that much by sourcing it from a very large value chain. So you actually have the time to organize that. Within financial services, it was always a problem that you don't have the time, because if someone applies for something now, it has to be custom made. And if you have to work with too many companies, you get too much delay. I think still, probably, I'm not sure if any one of you have recently, for example, tried to get a mortgage. You get the traditional view of collaboration in the financial value chain because people hand over piles of paper, do faxes and all kinds of things that they, at best, they do electronic data interchange, which was sort of the pre-API data exchange. But there was a lot of, basically every step requires human hands, and therefore the process takes 6 to 8 weeks still in a lot of cases. Well, of course, this is not what you would expect if you are a bit tech savvy and you are an understanding of what technology can do. You would not accept that because you know it could also be done within a day or even within hours. And so what you see is that, especially now that with the rise of APIs, you get complete digital ecosystems that allow you to actually do work with each other seamlessly, instantly. And I think the nicest example to explain that is, for example, if you try an account with one of the neobanks, think about N26, Revolut, Bank, whoever, usually they can provide you with an account in 5 to 10 minutes, which is a process that would normally take days or weeks, at least at traditional banks. And they didn't have to make everything for that because, for example, you have to take an image of your passport, you do a biometrical scan of your face, and actually all these components are separate providers. These are specialist companies that are really good at validating your identity, validating your address, validating your income, doing a biometrical scan and identification of you. And so, but at the same time, you can tell by the fact that it only takes you 5 to 10 minutes, it is pretty seamless how that's being woven into that experience. And that's, of course, what the future will bring, because not every bank, for example, could build their own skills of doing biometrical scans. It doesn't make any sense. It's highly inefficient for everyone to having to invent that. So it makes much more sense to be able to use an external provider to provide such services. But therefore, it has to be seamless, because otherwise you lose out of the point. And this is where I think the biggest acceleration has come from in fintech, is the fact that we are now, since let's say about 10 years, we're actually able to work like that collaboratively. Well, I think one thing I just want to mention with this image is the next step is the layer on top, the customer interaction players. This is where you see that open banking, and there's a lot of talk about more open data, but also the way, for example, big tech firms like Apple, Google, Amazon, Alipay play an important role in creating an interaction layer that is in front of the financial services player and shaping the experience of the customer without them having a full financial services license. So we really go to the point that we'll probably create like money supermarkets, financial supermarkets, where you will go to your favorite brand, which could still be anyone, because I think that game hasn't been played yet, but it's quite likely that it's it's rather a tech-savvy firm rather than a financially oriented firm, because the way financial services companies are regulated are actually limiting them from really using all the data that they have to do what a customer wants, while, for example, big tech firms have their hands free to shape the ideal customer experience. So it's very likely that at some point you will go to Google Finance, Amazon Finance, or Apple Finance to sort out the whole stack you see here, because they will just organize it for you. And it might mean that they don't have a financial license to actually provide all these products, but as an intermediary, they will just do fine. And it will, especially, they're very keen to do this because they are really trying to get their hands on the payment data, right? Because you've experienced this as well before. If you've searched for something online, and actually after that, I don't know, for example, it's raining and you search for an umbrella online, the coming weeks, you will still be targeted with umbrellas. Why? Because they haven't got a clue whether at some point you actually bought an umbrella. Of course, they could also figure out if you would actually still need one. So check the weather, for example, but you know that the algorithms there are not smart enough because they just don't know what happened. Ik zit in de presentatie. So what they're really keen on is actually figuring out which advertisement really leads to a payment rather than which advertisement leads to a click, which then doesn't mean anything because they don't know what the result was. So here you see the trends that I was describing. In any case, on the left-hand side, you see the availability of public APIs, which you can see that took a really big rise since 2010. And it kept on rising now until a really big maturity. So I don't have any recent figures because I think it's pretty hard to keep up these days. But you could also see what, of course, also played a big role in developments of fintech is on the right-hand side, basically the invention of the smartphone and the widespread distribution of that. So before, people would, on a certain moment, be behind their laptop, but in a lot of cases they wouldn't. And so actually spreading new services towards these digital channels was always really hard because you would have to do a lot of advertisement or get word of mouth out there to get people to use these tools. Well, you see that especially the work with app marketplaces within smartphones help really well to spread the word and make it relatively easy for people to adapt new technologies. And that's where I think that the high growth for some of the fintech companies that are, for example, consumer oriented, are going so fast as well on the front end side. And I think that's also where, well, one of the, I think the bigger terms we see these days is neo-banking is especially focused on. So this is a really brief, more on a theoretical level, sort of what we see that's going on. In the top three images, so you see three core layers that are enabling us to go through this change. So on the left top side, you see Moore's law, right? So calculation and computing power becomes ever cheaper, right? So I think we're not doubling every 2 years anymore, but let's say it's slowing down slightly, but still calculation power as well as storage capacity is still getting cheaper year by year. And it allows us to, so it actually democratizes the way we can use technology. And what it also helped us to do is if you go to the middle layer, is actually it allowed us to build software on software stack. Let's say when calculation power was really expensive, you had to basically speak machine language because everything that you would create in a translation layer on top of it would cost you very expensive calculation power. But as calculation power is becoming so inexpensive, you could actually build interaction layers on top of interaction layers to bring software closer to our human nature. And that's what happened now recently as well. So if you look at, for example, this middle example is an app development tool. So you can actually go to an online website and you can use drag and drop tools to build, for example, an iPhone app or an Android app. And you don't have to be a programmer anymore to make it. And that's, of course, a really important benefit as well, is that actually, while we're slightly getting tech savvier by the day by just using technology, at the same time, technology is also taking steps in our direction because they just create tools that are much more human-centric and allow us to just follow our intuition to get what we want. Of course, we already know that from a consumer perspective, right? So if you have a smartphone, we're used to having apps that don't have a manual. They have one button that does exactly what we expect it to do. And we're all really clear about what will happen. And that expectation is spreading out throughout the whole economy. But also in a B2B level, so it's not just about consumption, but also production is moving in that direction. So also in production, you want tools to help you in a similar way to get to that production. And this is one example for that. On the right top side, you actually see the iterative way of working that we've adapted so far. Yeah, sorry. I'll go to Q&A in a minute, Christian. Just a sec. Sorry. So the iterative way of working is quite important because let's say we used to work linearly before, where we would have basically write a plan for a year, get funding, and then work 5 years to build something and then push it to the market. While now we work agile and lean, which basically means that we work with 2-week or 4-week cycles where we produce something, push it to the market, and immediately go back and try to learn from what we've built by looking at the way our customers are interacting with it. And because we create this learning cycle, the waste we produce is much less, because we keep on iterating until it works with the customer and we can optimize it, and only invest more time and money once we see things are heading in the right direction, which is much better than actually being in a lab for a year, making something, producing it, and then pushing it to the customer only at the end when it is completely done and you actually can't change anything anymore. So those methods, I think, are really important to change the way we work. And that what it helped is that it actually does, it reduced the cost to start a company in IT altogether. So, and that's actually what drives all these startups, right? So the reason that we've got this Cambrian explosion of startups is basically what you see here on this slide, because you don't have to invest in your own infrastructure anymore, because everything is available as a service. All the tools become more human-centric, so you don't have to be a technology expert anymore to be able to build something, and it becomes affordable. So before, you always have to have technical skills, capital, and a good idea about what to make. But capital and tech skills are removed, so you actually only need a good idea to make something. And that's why everyone can start a startup. And that's sort of that democratization of starting a company or starting a project is, I think, what allows us to try much more varieties of solutions, and is driving basically startups forward altogether. I'll take just two slides and then I'll go to Q&A. So happy to, if you have any questions, please just shoot them in the chat so I can pick them up. What we see is that, especially because there were so many startups coming into the market, there was a lot of misunderstanding, I think, in the way how incumbent players and startups are different. So startups on the left, they have a real strength with regard to agility, and with the fact that they are able to take 100% risk. Because if you have zero revenue, there's nothing to protect, right? So if you believe that you can actually conquer the world, you're willing to risk everything. The weakness is that if you need capital, if you need regulations, or if you need to acquire customers, that's all really costly, and that's really hard to arrange as a small company. So even if we look to large companies, they all have the complete opposite. They have a really strong vested interest because they have many employees, a large customer base, revenue to protect. So, and they could grow at maximum, let's say 5 to 10% if they really work very hard. But that means that the benefit of taking a risk is really low compared to preserving what they have, which is much more important. So that creates a risk averseness that's driving their behavior much more. At the same time, we know that they also have really strong strength because they do have capital, they have distribution power, and they have sorted out their regulations already. So from that perspective, you could imagine that those two puzzle pieces would fit together. But then again, the fact that one is risk averse and the other one is risk taking makes it really hard to culturally bind them together directly, even though they could learn a lot from each other. But that's why we really believe it's a value chain approach you need, where the largest risk averse companies are more prone to be at the top here, and the smaller risk taking companies are more at the bottom here, and somewhere in the middle, either through intermediaries that are sort of, let's say, middle-sized, middle ground companies, they will find each other, but not always directly. Because actually, as a risk-averse company, to work with a very risky, risk-taking company is just something that's really hard. I'll pause here for a bit to see if there are any questions, also to make sure we don't run out of time too much. Sorry about that, Christian.
No worries, Don, no worries. I think the question that everyone has in their minds now, that with all these businesses that's in fintech around the world, you've made a great introduction. Everyone knows now what businesses are there in fintech. But people are probably wondering, where is the growth in the Netherlands fintech scene? Who are the biggest players? What's going on?
So in the Dutch fintech scene, we've been especially strong in the payment sector early on. So payments and everything with capital markets trading. Well, the capital markets trading, I think, goes back already to let's say the claim of the first stock exchange that we have in Amsterdam in 1604. And since that, it has a lot to do with collaborative nature. So sharing risks is something that goes quite well with the Dutch nature, and I think that's something that still goes well and extends, for example, to new stock market initiatives, or things like crowdfunding, which is also available in the market. Besides that, we saw that there's quite a strong tech ecosystem, and so when the internet was coming up and e-commerce was popping up, we saw a very vivid payment ecosystem rising together with that, and that's what sparked, for example, Adyen, which is the largest payment company now, serving most of the larger tech companies worldwide with payments. Molly basically following that swiftly, and you've got a dozen more companies in their footsteps. And we see, for example, a lot of trading companies, so online investment companies, trading companies, neo brokers. That's also quite a popular area, and this is all maybe on the front end. I think on the back end, what I see, and let's say generally, partly driven also by what I said about regulations earlier on how tough it is to actually start a regulated company. About 80% of fintech companies is actually running a B2B service to financial services companies. So they help financial services companies get access to certain data, certain algorithms, to stay compliant, to do a risk analysis, to fight fraud, to track AML, or even could provide complete banking platforms. So that's, I think, where the most of the market is heading, and that works pretty well. That's going pretty fast.
What's the competitive strength in Netherlands for fintech? Seems like it's a good place for people to make their own startup. We've heard payments, online brokers, a lot of B2B services in AML. Why do people open their startups in Netherlands? What's the competitive strength?
I think it's a relatively small market. So I think, let's say 17 million is still quite a nice audience if you look at the population of the Dutch market, but it's still organized like a real small country because, for example, if you talked to the biggest 3 banks, you have 90% or 85% of the market covered. So it's still socially, it's a small market, so it's easy to get around. And so to validate your product and figure out if you could actually struck a deal with any of the financial services players is relatively easygoing. And I think everyone's relatively tech savvy. So if you, for example, look at the number of bank branches, I think it's the lowest almost in Europe after Sweden or something. And everyone is used to doing their financial services via their smartphone rather than going to a branch office or somewhere else. So the consumers are really adaptive to try new things, and that makes it, I think, really appealing to start here and experiment. And also one thing I think that really helps is the fact that everyone speaks English. So you actually don't even have to bring a Dutch version to the market. You could actually work with the English language version to test it here.
Oh, there's an interesting question relating to this. If MBA students want to make their career in fintech in the Netherlands, what particular skills are important? And is Dutch language fluency a requirement?
Yeah, well, so in line with what I just said, no, not at all. So I think especially most tech companies, they work with people from all over the world, and always their natural language on the work floor is English. Even in my organization, we were with 8. I think we have 5 nationalities, and we all speak English all day long. So, and that's becoming quite common. Actually, it's becoming pretty hard to order a coffee in Dutch in Amsterdam these days. It's becoming increasingly an international melting pot, which I personally really like because I think it sort of brings much more flavor to the city than before. So I think the language that's easy. I think from a skill perspective, I know a lot of people hammer on coding, but I really believe that the real in line with the fact that there are so many tools becoming available to create software without having to program, it's much more about the architecture. So I think the main skill you need is understanding digital processes and being able to rethink. Basically, if you can handle if this then that pretty well, I think you come a long way.
Interesting. What do you mean by architecture, like in say like digital processes? Is there any recommendation?
So to give you an example, I think I'm not sure if you're familiar with this, but otherwise you should definitely look into it. There's a platform called Zapier. That's .com, which is an API connection platform. And so what it does, it basically allows you to take your Google account, your Asana account, Slack, WhatsApp, whatever, basically all these kind of services, they have an API in that platform. And it allows you to actually connect all these services with if this and that. So it's basically, to give you an example, what it allows you to actually build your own ERP system for your company by using all these components. To give an example, I could, for example, put a Gravity form, which is a form builder, on my website. If I would get an application there, for example, for a vacancy, I could say to this on this platform, please send me an email via my Gmail account with the application. Please send a Slack message to my colleague who does HR to take care of this. Please put a note in our CRM system with this person and that they applied. And please send an SMS to the person as feedback that they applied and to thank them for that, and that we will get back with them within 2 days. So I could actually work with all these different kinds of service providers that are not, they don't work together literally, but this ecosystem allows you to actually manage them to work together by just using if this then that logic. And that's what I mean with architecture as well. You just have to sort of think through how the data can flow and how you can make use of all the building blocks that are already out there to build it and make it do what you want. And if you understand this, basically the whole world is at your feet, I believe.
Thank you. And you mentioned earlier on consumers being very adaptive, right? But if the consumers are very adaptive to new technology and new offerings, why is the flourishing area in Netherlands the B2B side and not the B2C market? Is it just because of the size of the market?
Yeah, so I think it's a good question. So first of all, customers are tech savvy, but they're also really sticky. So traditional players can basically be 1 year behind all the innovative players with regard to their offering. And if they do that, they still will hardly lose any customers, because most customers don't want to invest in changing players, because that's also from a customer perspective, that's really taking a risk, right? Because you're not certain what will happen exactly if you change everything around. So what a lot of people do is they open an account with a new player to try it, but very often they don't move all their business there. So that's one part. So that's why it's only relatively slowly if you have a customer proposition in how you get traction. So you might get a lot of account openings, but it doesn't mean you actually get a large share of wallet. Besides that, I think it's important to let's say why I think the biggest barrier is with the fact that not many companies are starting new because of this compliance barrier, right? So because the cost of compliance are so high, less companies are actually creating new B2C propositions. And most of the ones that we see that are successful now have been started 5 to 10 years ago, at least. By the way, I wanted to make one remark on the skills of what MBA students actually need to be successful in fintech. And I think because one thing I feel, and this is I'm not sure about your complete curriculum, right? So this is based on assumptions as well. Let's say running a small company and running a big company can be really different. And I say the tradition, and if you want to know more about this, you should watch some YouTube films from Steve Blank, who is really making the statement that a master of business administration is basically educating you to be an accountant for a large firm, right? I know that it's not like that anymore, but let's say 10 years ago, you could still make that statement. Because running a big company requires much more administration and managing something that's relatively stable, while if you work in a small company, you actually have to be much more focused on dealing with change. And so I think that's one thing that I just want to print into your mind. And probably you're already, I mean, since INSEAD is an advanced MBA program, you're probably already getting some of this in your curriculum. But it's good to imagine that you really have to rethink all the tools that were made at some point for large companies, to think that in small and ever-changing companies are just requiring something else. So I would really, it's good to just imagine that. And also probably you will have to adapt your salary expectations. That's also something to mention as well. As in smaller companies, you might get more stock options or other ways to benefit in the long run. In the short run, cash is always constrained. So you will have to probably deal with lower salaries to start with.
Thank you for the addition. And maybe just the last one, can we spend a couple of minutes? Could you share a little bit on Holland Fintech? Who are your members? What else? What do you do other than the industry updates?
Yeah, sure. Let me
Okay.
see that I have, so here I've got a nice image for that. So this is a list, it's already, I think, a year old. So the slide of the members that we work with, but it gives, I think, quite a nice idea of the diversity in the ecosystem. So what we're trying to do is actually create a platform. So it all started with the idea on basically, if you go to think about the initial exchange, like a real marketplace, it would basically be a square. And if you would come to the square each morning, what would you do? Would you start trading, or would you start talking to people to understand what they think and listen to what the latest news is? And we really believe in that sort of very human way of looking at things, is that actually what you first need to do before you can take any action is have a similar understanding with the people you want to do a trade with about what's happening in the market, right? You need to understand, what's happening in the West, what's happening in the East, who's making which deals. And so all that information is helping you shape your own idea on where your opportunity might be. And then at the same time, by talking to these people, you learn about that, but also you see then where the opportunities are for you to do something. So you can actually also work with these same parties to make a new connection, build a new product, be a supplier, be a customer, and do something. And sort of that's the whole idea behind actually what we're doing with Holland Fintech. So we write a lot, we do a lot of industry updates with the core focus of actually making sure people speak the same language, have a similar understanding of where the market is heading, and understand where the opportunity lies with other parties, and try to connect them to that on a daily basis. And we do that with research. We do a lot of curated storytelling, basically about what's happening in the market, as well as direct connections and events to connect to everyone. We work now with around 600 parties. So that's basically I think about 3/4 of those have a strong relationship with the Dutch market, but the rest is basically Western Europe altogether.
Right. Interesting. That's a lot of members, 600 parties.
Yeah.
And maybe one last question. Do you guys also help these companies recruit? Do you guys help connect them to talents?
Yes, yeah, we do. So we, from time to time, we do events with universities or other educational institutes to make people aware of what's happening in the market. We also have a vacancy postings on our website, and we see that, for example, especially around our events, that a lot of companies are actually meeting, a lot of people are meeting companies that are looking for talent. And so there's quite some people that go to our events and end up working at one of the companies that pitched or was available at the event, for example. We see quite a lot of interaction there, which of course is a bit more difficult these days when all the events started moving online rather than offline. But still, we see that there's some nice interaction between that. And we've actually also have people that have worked already for, let's say, 3 members already, sort of jumping from one ship to the other. And basically, yeah, so keeping the talent in the pool is also one of the goals that we have.
Sounds good. How do you throw yourself into the pool?
Sorry, how do I?
How do you register to be a talent in the Holland Fintech network?
Good question. So we don't have personal memberships yet. So we work with company memberships at the moment, but we have a couple of open events now. Also, each week we have a Flash Friday where you could actually sort of hear what we do, an update of the market, latest market developments, and we basically discuss some of the news items that will go into our newsletter that we send out every Friday. That sort of tracks global fintech developments. And once a month we have an open meetup where you can everyone can join. So you can see pitches and interact with a lot of the players in the market. We currently do that via an online platform, but hopefully at some point we'll be able to do that physically as well. That's just a really nice way to meet people that are active in the ecosystem, and figure out also from a talent perspective, where are the opportunities, what are people looking for, what do people think about my profile, for example.
Perfect. So folks, you hear it here first. Join Holland Fintech if you're interested. They have their monthly updates going on. Get their newsletter, get their industry updates, and set yourself up for a career in fintech in the Netherlands. Like, I think we've overrun enough. Like, thank you very much, Don, for the time. Thank you very much for the insightful sharing.
Thank you for the opportunity to talk to you.
Likewise, thank you everyone for tuning in, and I'll see you in the next session.
Thanks. Have a great day. And let me know if you have any questions. Just check LinkedIn, for example. Happy to take any questions there.